Well, guys, it's happening. We are testing the 200-day moving average across most of the major U.S. indices, which sets the tone for pretty much everything else. Whether you watch stocks, indices, forex, commodities, or more, we'll be taking a look at all of it for the week ahead in this video. Let's get started. And as we do that, let me just ask a quick favor. If you could hit the thumbs up button and subscribe if you're new, it would help quite a bit. And let's jump in. So taking a look at the NASDAQ for starters here today, I wanted to talk a little bit about where we left off last week. So last week was actually a bit of a range-bound week when we talk about price action. And we could see that we did, as I just showed you, hit that 200-day moving average intraday on Thursday. On Friday, we had a little bit of a really kind of boring candle, not too much volatility. But of course, this weekend, we get a whole bunch of news with Trump, China, Saudi Arabia, a whole bunch of stuff, which we'll talk a little bit more about as we get started in this video. So first of all, here's the thing. So NASDAQ, if we take a look at this just from an objective standpoint, where are we in this kind of cycle? We have recovered from those lows. We put in that higher low. We broke out of key resistance. Things are looking okay, but are we in the clear? And again, when we pull back up on those moving averages, I think it would be naive to say that we are all good from here and that we're likely to just chug higher. The reason I say that is because even if you're bullish, like I am, by the way, a little bit of foreshadowing here, I'm bullish myself. I still acknowledge that we've had a really good streak here, and it would not be out of the question, in my view, to get a week where we actually kind of consolidate lower and test back on some of these key levels that we've broken through recently on the NASDAQ daily chart. So that could lead to some breakdowns in the 4-hour chart. So with that in mind, let's take these moving averages off and let's talk briefly about where we are from a big picture standpoint. We've put in some higher lows. We're testing some major resistance. And despite me being bullish overall, I do think it's probably the likely scenario that we continue to respect this area until we get some sort of major catalyst that pushes us higher. So going into this week, I know I just kind of broke down the big picture price action wise, but let's talk about actionable ideas for me this week. So I am bullish on the NASDAQ. If we get a pullback into this 19,200 level, I will probably look at the fundamentals at that time and look for possible buys at this key level of support. Alternatively, if we break through this level, that 200-day moving average, I'll be looking for pullbacks as an opportunity to trade the breakaway momentum, which I believe could take us back to that 22,000 all-time high on the NASDAQ. So I'm either looking for a pullback or a breakout here this week, and in both cases, looking for bullish opportunities to ride the move. The same thing could be said for me on the S&P 500. If we take a look at the moving averages, you can see we are still a little bit of a ways away from that 200-day moving average, so it's possible that we still get this kind of move to head back up and test it. The alternative would be, like I said, a breakaway move. Perhaps we get some good news in regards to China, and maybe we do see some higher pushes on price. Now, again, we've had some optimism around this whole Chinese-U.S. kind of discussion, and whether that has, big merit for us or not, we'll have to see, of course, as Monday comes. But the bigger point is, again, watching price action to see how this reflects in the market for the week ahead. Same thing for the Dow Jones. If we take a look at Dow, you can see we have had some really impressive momentum to the upside. So I do think it is fair to say we could see some pullbacks in the meantime, but higher lows and higher highs are areas where I'll be looking for opportunities to take entry, specifically higher lows forming, which I'd be looking for a retest of this area, or if we get some sort of breakaway movement, like I said, looking to join back on minor pullbacks within the daily and 4-hour time frames. Taking a look at our top setups for the week ahead, I've got Dow Jones, the FTSE, NASDAQ, S&P 500. I've got some yen crosses, and I've got Bitcoin on the list. Of course, also pound yen, Swiss yen, and the German DAX. We have quite the list of possible setups this week, so I'm just going to start chugging through some of these ones. Just a heads up, if you'd like to take advantage of the sale that we're doing on the Edge Finder, that 45% off discount is ending as of today. We're doing 45% off. It's our biggest discount of the year, and we ran that a little bit extra for people who needed some extra time. But like I said, that is the last day for the biggest discount that we're doing all year long. It's 45% off, and all the information for that tool can be found in the description down below. So indices, I just kind of went through that, basically my idea, so we can move on to kind of our next category. Let's take a look at some yen pairs for the currency traders out there. We're looking at things like euro yen as a possible bullish setup, although for this one, price action wise, not really a big fan here off of the daily chart, which is where I compose most of my market analysis. However, NZD-JPY, this currency pair is a little bit cleaner. In fact, we actually had a pretty key breakout last week, which allowed me to get an initial long position. I actually added into a new NZD-JPY long position, and my goal here is to see if we can take price back to key levels of resistance looking left, such as the 89 and 87 level for starters. I think that this thing has momentum to potentially carry on, and I want to talk fundamentally about this currency pair for just a second and why I specifically like it. So I think that there is a likely scenario that the New Zealand dollar may actually strengthen against the Kiwi yen. But when I talk about currencies, commodities, indices, and when I want to buy something or sell something, I actually want to have a reasonable point as to why I think there is value to the New Zealand dollar relative to the Japanese yen in future coming weeks. Let's break that down. So if I actually go over here, and I'm going to break this down based on our economic heat maps for a second, and we just quickly look at the composure for the New Zealand dollar. What we can see here is when looking at the economic heat map for New Zealand, we have several things that are strong specifically for the currencies. The currency's impact is mostly bullish when we look at this list. Just giving this a high level. Oh, sorry about this. I accidentally clicked something. When I'm looking at this from a high level perspective, right, what we can see here is that GDP growth surprised to the upside. We expected 0.4% growth. We actually got 0.7% growth. PMIs at 53.2 are showing strong growth. Services PMIs slightly better than they previously came out to be. If we take a look at retail sales, better than expected. We see inflation year over year actually came in a little bit high, which is strong for the currency, by the way. And then we have, let's see, what else do we have? We have PPI came in a little bit lower than expected, so perhaps a little bit weaker there. However, unemployment rate, 5.1%. That came in lower than expected. These are things showing that the economy for New Zealand is relatively upbeat. And let's cross-examine that for a second to Japan. And when we take a look at Japan, we actually see the opposite to be the case. On a high-level perspective, we see GDP growth came in lower than expected. We expected 0.7% growth. Quarter over quarter, we instead got 0.6%. So that was a negative surprise and a bearish catalyst for the Japanese yen. We break this stuff, and instead of being afraid of market news, instead of saying, oh, market news, that's bad, that makes the market move, on this channel and in my analysis, we actually embrace, lean heavy, and trade aggressively market news, right? So many people are so afraid of market news, but it's likely because they don't know how market news actually impacts charts that they're looking at. By looking at this close, we can get a better understanding of which charts are likely to move in certain ways. So I do like the upside. I do think that the fundamentals and price action here with this breakout that we're starting to see suggests that we could see higher prices on the New Zealand dollar against the Japanese yen. Is that a guarantee? No, we never have guarantees. We only have educated guesses and risk management. That is what proper trading is. So I like the Kiwi yen. We can continue on with our analysis. So I am long that one, shared that one inside of our Discord group. Remember that any trades I take can be seen inside of our Discord channel. The link is in the description down below. The DAX is our next one on this list. So if I just quickly take a look at where the German DAX is, you guys, I don't know if you've been keeping up with this. This is impressive. And this is what we call relative strength. And I'm not talking about the RSI or the technical indicator that many traders know about. Nothing against the RSI, but we're talking about relative strength in a different format. We're talking about when you look at, for example, the USA or you look at Germany and you say, well, for much of the last few years, Germany has been significantly outpaced by the U.S. We would call that relative strength in favor of U.S. stocks. However, in recent times, that has actually flipped, and it is very clear that in 2025, international stocks, not just Germany, but Germany is a shining example of outperformance in other places. Do I think that will last forever? Probably not. However, right now, that's the story. And we could see momentum is favoring the German DAX. Take a look at this monstrous trend. We sold off for the German DAX just like the U.S. indices with all of the trade trauma that we've seen here in recent times. However, this thing's back to all-time highs. That, my friends, is what we call relative strength on this channel, because take a look. US indices, we talked about that earlier. Are they at all-time highs? No, still very far away. Well, not very, but they're far away from their highs in relation. 8.4% still to go just to get back to those highs. So keep this in mind, guys, when we're talking about essentially the relative strength of major indices. We do want to notice when something is doing something like this. Another good example of this is in the metals world, right? So when we take a look at gold and we see that gold has been on a relative basis much stronger than silver, we want to take note of that. This makes me, as a trader, as a momentum trader personally, I typically will lean into the winner of the story, right? So if gold is outpacing silver dramatically, I'm usually going to be trading gold. And if silver starts to catch up and take that role, then I will certainly switch camps, right? Also, this is bothering me. Let me just remove this so we can see these indices. There we go, a little cleaner. Anyways, so when we talk about the German DAX, I love this one. I would like to be long the German DAX. It looks really strong to me. I think that we're having some really good outperformance here, and that is likely to be a theme of 2025. I don't think that that's necessarily over. Do I think U.S. indices are just going to fall apart? No, I actually don't. I think that they're going to go higher too. But I do think that this German DAX is telling you something, that there's this interest in broadening out the scope and getting involved in international stocks. I've talked about this year, and I would like to actually add to things like the DAX. If we get a break and retest, I'll be watching this one as an opportunity to continue to ride this momentum. So we're on breakout watch here for the German DAX going into this week. Let's take a look quickly at some other yen crosses. Pound yen, I know just by remembering this is kind of a choppy chart. Don't love this one. If you do get, you've kind of got a similar concept to the New Zealand yen, but still would I call this, great chart? Not quite. I'd love to see this thing break away from this kind of downward structure we've been in. And then the other one was Swiss yen. And what I'm doing here, guys, just so you have context, is the Swiss yen, for example, right? By the way, look at how it is just kind of ripped through a whole bunch of levels of resistance here. In fact, we could start fresh. There's been so many resistance levels broken. We are currently sitting at one. But what I want you to notice here is I'm going through a whole list of items here. I'm basically just looking for setups. This is what I do day in, day out with the tools that I've built here with my company, A1. We're basically building stuff to simplify the process where I can just flip through charts and know that this is generally telling me the technical, sentiment, and economic data are leaning a particular way for the charts that I watch. And I really love having that. It simplifies my process substantially. So when I take a look at, Swiss yen, not a big fan of this chart. I would love to see like a breakaway movement, then pullbacks. You guys know I'm very keen on that kind of setup if you watch my channel. But, we've got some key resistance levels overhead. I'd like to see some of those levels really get broken before we get too decisive. Next one is Bitcoin. Guys, have you been watching Bitcoin? My goodness, this thing has been a rocket ship. And talk about relative strength, going back to that theme that we've been discussing. Relative strength. Bitcoin is absolutely a top dog winner. While indices are still kind of, teetering back and forth, Bitcoin's back near the all-time highs, and this is a very high-risk asset. So the rally, just so you know, from the low has already been 39% plus. That's an incredible rally back in just a short period of time. Of course, Bitcoin is a very volatile asset, but I got to say, I've been very impressed with its performance, and I'm looking to be a buyer if we can get pullbacks. So if I draw in my fibs from the swing low to the swing high, this 38.2% retracement looks really attractive for an opportunity for me to potentially get long. I know that's a ways away, but you guys know how Bitcoin is. It can move real quick, real fast. We could get one of these moves, and that could actually get me into the trade as long as we still respect this technical level. And like I said, we have Edge Finder confirmation at that time. But things look pretty good. I also want to just take a quick pause to go back to our institutional positioning and see what happened this past week with the crowd sentiment. So let's take a look here. As of March 9th, our software pulled in the latest data here available for the commitment of traders data. In terms of top buys, we had big buys in the Nikkei, the South African Rand, the British Pound. The Dow Jones was yet again a net winner there. We take a look at copper, Swiss franc, a little bit of mixed sentiment on gold, mixed sentiment on S&P, Aussie, Euro, CAD. And then we get into some of the more sell side stuff, which, for example, we see some slight leaning towards selling on things like Bitcoin, NASDAQ silver, US dollar, Japanese yen, US oil, treasuries, the New Zealand dollar, and the Russell. So just keeping in mind what we're seeing there with the institutional money on a long-term basis. When we talk about biggest winners, institutional money seems very long oil, gold, silver, the Japanese yen, Dow Jones. And then we take a look at the sell side. We've got Swiss franc, the Canadian dollar, the New Zealand dollar, 10-year treasuries, the Australian dollar, and SPX is also a net sell. So really interesting to keep an eye on that. Another sentiment indication that I'd like to just check out with you guys. Well, we're not going to check this one because, of course, it's down when I'd like to cover this. We do some maintenance over the weekend sometimes, so that can cut into, of course, these things showing up properly or not. I'm just going to give it a double check. There it is. Okay, it is working. So sometimes it's just updating a piece of information. You got to refresh the page, and for Edgefinder users, there's a little bit of a quick tip. Anyways, take a look at this put to call ratio. You guys know I love this one. If you watch the and if you're not, what is the put to call ratio? Put to call ratio just takes a look at the volume ratios in the options market, and it says, hey, are people buying a lot of puts, meaning people are freaking out, or are people buying a lot of calls, meaning they're feeling really euphoric or optimistic? And for the first time in some time, guys, we have crossed back below the neutral line, and we are now seeing people's sentiment still very in the neutral camp, but we're getting closer to a potential euphoric feeling market, which we have not felt that way in quite some time. People have been terrified of this market at the worst possible time, selling into the crash. I've gone over this many times, but if you're new to the channel, just a heads up, people got peak pessimistic in the options market around April 8th. What happened on April 9th? Well, let me just show you. Some of you guys might remember. Here's April 8th, where people got peak bearish. Here is April 9th, where we had the biggest up day in a decade. You know, a crazy up move in a singular day. So just keep that in context. We do want to keep an eye on what the crowd is thinking, what the crowd is doing. When we take a look at the AAII Investor Sentiment Survey, we can also see the crowd sentiment is still very pessimistic out there. Respondents in the stock market regarding what they feel like in the next 6 months, that's the survey. And most people are still saying they're feeling bearish. So that, to me, leaves some opportunity to continue to see upside in indices. Take a look at the dollar index here real quick. Dollar index, I'm feeling way more neutral than I was in recent weeks. Trade deals seem to be coming around the corner. That is one of the reasons. But also some of our economic data has been recently coming in a little bit stronger than expected. Take a look at the U.S. economic heat map, and you can see we're back to about a 50-50 shot when it comes to the U.S. dollar's impact according to our list of economic data. Some of our recent strong points have been services PMIs, which came in better than expected, jobless claims, which were, slightly better than expected, but not by much. But then the NFP report, which came in strong compared to forecasts. And that's what it all is all about, right? If you're a fundamentalist, it's all about what people think the market's going to do versus what the market actually sees. That is really the important component. So when we look at the dollar index, we're in this downtrend. I'd be really cautious about this because, again, I think we may have run this trend a little bit far, and you guys know how currencies move. Currencies typically move back and forth over the longer term. So I think we may be starting to see the dollar index nearing a bottom. I don't necessarily think that means we just go ripping back to the high, but I wouldn't be surprised if we bottom out and kind of just chop around for some time here. So I do think I have a neutral outlook on the dollar index. I'm watching to see how price responds to this key level looking left, that being the 100.5 level in terms of price action. Going to keep an eye on that as that will guide our decision making with things like the euro, which I actually closed my position out. If you are in the Discord, then you may have noticed I had a long position on the euro and chose to actually close out towards the high of day on Friday for about just slightly under a break-even trade. So on this one, just neutral for now. Not really willing to short it. Not really willing to long it either. So just going to be on the sidelines at this time when it comes to the euro against the US dollar. Pound dollar, same thing for the most part. Really, my focus right now is actually on yen crosses, where I have a long bias when it comes to that NZD JPY trade that I talked about. Would also be interested, of course, in like Aussie yen and similar currency pairs to that. But we'll keep an eye on that one. Going back to our top setups page, another one that I really wanted to draw your attention to today is oil. So if I take a look at U.S. oil, this is hot on the watch list for me. and I missed my entry on Friday. I had this this level drawn in the 4-hour chart. I was looking for an entry right here. Just missed it, so didn't quite get there. But if we do get some pullbacks, I am actually looking to potentially engage a long position on oil this week. Let me talk about why for a second. Let me defend this thought process. So we are getting a long or a bullish bias on oil. Trend started to move positive. I'd like to see that thing flip to +2. But we also had some good PMI, good jobs data. And for much of the same reasons why I've gone neutral on the dollar, I've actually even gone bullish on oil. I think oil is a little bit oversold here. I'm just looking for price action to kind of marry up with my bias, thinking that, okay, the global economy I don't think is going into a massive recession. And if that is my case, then I think $61 oil is actually looking relatively cheap. So I'm looking for possible breakaway moves. What I'd love to see is either a retest intra-week this coming week, and then looking for this move, or even if I don't get that, something like this. So a breakaway above that 64 level. Both of these scenarios I do think have potential upside for oil prices. I'm just looking for that breakaway move. I don't want to be, trying to buy the bottom on what could continue to be a downtrend. I just think we may have some room to squeeze higher. I think the risk to reward could be good. Like, I wouldn't be surprised if we go back and kind of on a bigger picture want to go test some levels like 65 on WTI. So keeping an eye on it. I do like oil as a possible long this week. Just going to look for a possible setup on that one. Gold still very neutral, so I'll just pull up the gold chart as I know it's a big fan favorite. So if I take a look at gold, I really kind of stand by this neutral call on the edge finder. I don't really have a decisive move one way or the other in mind. On one hand, you have still uncertainty about trade deals and things like that, but trade deals seem to be starting. So trade deals favor bearish downside. But at the same time, you have central banks and uncertainty with Pakistan and India and China and Taiwan and Russia and Ukraine. There's reasons always, in my opinion, to be long gold for the long term. But in the short term, I think that the trade deals could actually take us lower. And that, again, that uncertainty, you really need something to keep this thing. It's been fueled higher for some time. We need another catalyst. And I think the more likely scenario is that we just kind of chop sideways. I wouldn't see a huge move down or a huge move up. I think most likely we just kind of go sideways. So I have my eye on other things right now. I just think I have more interesting stuff to watch for on gold. However, from a technical basis, if you're a bear, again, you're probably watching for a break of that 3,200 level. And if you're a bull, you're waiting for or potentially looking for that 3450 level to get taken out, taking us to new highs. Like I said, I know that's kind of a nothing burger answer, but really just waiting for technical price action to clear a key level of support or resistance before we get any sort of price action bias. Right now, really choppy past week, very confusing out there for gold traders, I imagine. So with that said, what else do we have? CAD Swiss is our only bearish currency pair at this time, so we'll take a look at CADCHF, pull this one up. CADCHF, really kind of a big shoot to the downside. I do actually have a long position on this one, so this is looking really silly right now, but I am looking to just kind of get out of that trade. However, I don't hate being long CAD Swiss from a contrarian perspective on the trade deals, because if you do get trade deals, CAD Swiss could actually move higher. Canada, of course, being a more risk-on currency, Swiss franc being a more bearish risk-off currency, more of a defensive one. So just something to think about. By the way, guys, I just want to let you know also down below in the description, if you're looking for a better brokerage, check them out. There's several linked in the description down below this video. If you're looking for something to get when you sign up for a brokerage, consider using the links in my description. Specifically, what I mean by that is most traders don't even realize that when you switch brokers, you can usually get some really great perks just by signing up with a specific affiliate or referral link, which I have several linked in the description down below. Full transparency, if you choose to use my links, you'll be supporting my channel and my work here because we do get some sort of kickback whenever you sign up. So that's full transparency with you, but in addition, you get something out of it too. Typically, there's some great sign-up perks available. All of them are linked and listed in the description down below for your convenience. Thank you very much for watching my video, and I do hope you have a great trading week ahead.